What do I do when the stock market is crashing? Sell your shares at the correct time, might fall even more. Years of losses, no future. Price will never recover. Don't invest in companies like this. What's up, SRC, it's the Russian dude, and today's video I'll tell you exactly what I'm planning to do with my portfolio during stock market crash. I will also suggest some portfolio management tips for any investor with either low or high risk tolerance, so that any single one of you can benefit from watching this video. Alright, so there is no denying the fact that the stock market has recently touched the correction zone, and we still do not know whether it will go up or down from there. But you know what? It does not matter, because the tips that I'm going to show you in this video can be applicable to any stock market crash now or in the future. And by the way, every single thing I'm going to share with you in this video is not a financial advice. This is just how I personally see things. And also, in my very honest opinion, I think that the stock market is somewhere near close to the bottom, unless there is some black swan, white cat, blue tiger, or any other color animal combination coming into the future. And also, if you want to see a short mini series about my thesis, how I correctly predicted the stock market correction of the end of January, beginning of February, you can do it after watching this video, and don't worry, I will remind you. So now let's get back to the video. What do I do when the stock market is crashing? This is the question that many of you might have been asking in the last couple of months. And my answer here is to do nothing. Thank you so much for your attention, товарищи. I will see you once again. Okay, wait, but seriously, there is nothing new I would need to do in this market. I'll just simply continue to dollar cost averaging, because as you already know, it is impossible to time the market. Because first of all, you need to correctly sell your shares at the correct time, and then you need to correctly enter the market once again, buying shares at the correct time, which means that you will need to time the market correctly twice.
English, mother! Do you speak it?
Making it the same impossible as avoiding Gulag when speaking something against Putin. And if you never want to go to Gulag, you should definitely like this video and subscribe to my channel, because this gives you Gulag protection.
Trust me.
What's up? I require your attention, because now check this out. How about that? So as you can see, no matter what happens on the stock market, I am not selling, because if I'm investing for 20 plus years, monthly volatility is simply irrelevant. And by the way, dollar cost averaging helps to smooth out this volatility.
Nobody knows if the stock is going to go up, down, sideways.
And for those of you who are not familiar with the concept of the dollar cost averaging, this simply means spending the same amount of money at the same day of the week buying as many shares as possible, which means that when the markets are low, you simply buy more shares, but when the markets are high, you just buy fewer shares. And me personally, I'm using dollar cost averaging ever since I started investing, and my purchase day is always at the end of the first week of each month. And since some companies that I like right now are down 50% or even more from their all-time high in numbers, this creates a perfect opportunity to build big position in these companies. If I'm ready to buy a company at $300 per share, why wouldn't I want to buy more of these shares when the price is like $200? Think about the price decline is not something that destroys the capital, but as a perfect opportunity to buy a great company cheap.
Everything that's going on, both politically, globally, is all planned.
Another thing to do when the stock market is crashing is to absolutely never panic, and this includes reducing the amount of content you consume online, especially some YouTubers who change their mind every single day. One day they're all in on the stock market, diamond handing, and the very next day they sell entire their portfolios and even short the market. And the only thing that happens even faster than this is me thinking that I'm not gonna drink vodka today. And then still not doing this, because this was just water. Probably. Whoop! Alright, so this is just me, but what if your risk tolerance is higher? What would I do if I were you? As you might already know, high risk means high reward, and those stocks that fail the most have the higher potential of recovering fast and strong, assuming obviously these are legit and financially stable companies.
Always, guys, respect the pump.
So don't rush investing in those fraud companies that fell like 90%, because in most cases this decrease is justified. And what I mean by risky companies are technological, innovative, software, or or any other relatable companies that have the potential to impact the future. And if you have the guts to survive the market turbulence, you can go ahead and check some of these companies that fell significantly.
And now the mark. Oh! Oh! It went to zero!
These are the companies that usually fall harder than the stock market in general, but they also tend to once again recover faster and stronger. And my own personal criteria about investing in these companies, besides obviously falling drastically from its all-time high numbers, is that these companies must not have high unmanageable debt first of all, then it must be a legit business with real products and services, and thirdly, there must be clearly defined future potential and vision. But once again, be extremely careful about investing in companies like this, because such companies might fall even more, and there might be a period of huge losses before things start to even look better. We're all gonna die! You should be emotionally prepared for potentially years of losses before you can even break even. Things might look awful, like there is no future, or you might feel like that the price will never recover, and it might never do. So if you're not ready for this, don't invest in companies like this. Sheesh, I love these slides. I think when the markets are up, I'm gonna be using green, and when the markets are down, I'm gonna be using red. But if you're a conservative investor, or if you're close to the end of your investing journey, this is what I would personally do. First things first, I would definitely be more diversified in the first place. Because if you want to withdraw your entire portfolio in just a couple of years, and you have 100% in stocks, you need to do this reallocation of assets as soon as possible. As a general rule, the closer you are to the retirement, the more fixed income securities you must have in your portfolio. You don't need to chase this additional 10% of return when you have a chance of losing 20% of your entire portfolio. Conservative investors should always have different asset classes in their portfolios. Besides stocks, think about having some bonds, treasuries, commodities, or real estate, or anything else that would further diversify your portfolio, where treasuries, by the way, is one of the safest investments, relatively speaking. And yes, such portfolio might not perform as good as highly technological oriented portfolios during bull market, but they will definitely resist most of the decline during bear markets. Because the final stages of any investing journey should be always about preserving your capital and not trying to accumulate it anymore. Thank you so much for your attention, товарищи. Now go get up to $4,500 from Wealthsimple, and all the other useful links will be down in the description. And now feel free to watch the mini series about me predicting the stock market crash that I suggested earlier.